Boom, boom, boom. Today is that day where we're going to look at the two portfolios we have built, the $1,000 portfolio and the $10,000 portfolio, which I had put together last month in December from 2023. Now a month later, looking at it, the progress, how well or how bad have we done? Remember, this market is not about a continuous upward trend. You're not going to be in the green continuously, but the long-term vision is for you to be there. When you initially purchase stocks, crypto, it may not have that upswing as soon as you purchase it. You might have to give it some time. That is the way that investments work. It's a long-term vision that you got to be able to hold on to. So let's just get right into it. So our $1,000 portfolio had ETCG, Grayscale stock, LTCN, Grayscale stock that's linked to crypto, and BCHG. Those $100 in each out of our $1,000 portfolio. Our return so far in ETCG is $1.96. VRAR, normal stock, Beyond Meat. We got Law, which is an AI-based law firm. They use AI technology in order for them to scan through documents. So they cater to a lot of attorneys. Rivian, car company. Xpeng, car company / flying automobiles in the future. Jemiah is kind of like an e-commerce based company, but they shut down their whole delivery business and focusing on another sector. Nikola, car based, and then Lab, which is a biotech company. We are at a return of $164 loss. You're looking at this and like, dang, Yali, like, you cannot pick stocks. This is not what this is about. Again, this is a long-term vision. That $1,000 portfolio I showed you last time, where it almost doubled to $1,800. At one point, the value of it was $650. I was down 35%. You cannot panic. You cannot go crazy. If anything, when you see these are down, you buy more. But for the sake of demonstration, I'm not going to buy more. If the market is at a bad trend, I would allocate like all the funds. But if it's at a middle point, I would put maybe $700-800 and then the other $200 in reserve, so that way I can buy lower when some of these stocks drop. But for the sake of demonstration, I wanted to show you that's all I had at that time, and I wanted to invest all of it at that point in time. This is what the return would look like. VRAR is a company that they have a virtual reality in terms of the whole AR, VR space. That's what they're based on. So if you're looking at this for now, I don't think you should have this at all. This is more for the long-term vision. As it evolves a lot much more, we see that the Meta is pushing out a lot better technology, and who knows, Meta might purchase them if they see an opportunity there. But this company is in a startup phase. It's not in the profit zone yet. They have a lot much more work to do. So at this point, you may be wondering, did I sell any of these? No. Your returns are not high enough. Like Lab, you are up about $6. ETCG, you're about $1.96. Not at all. Remember, ETCG, LTCN, and BCHD, they're going to go through a up and down swing like crazy because they are linked to crypto. Crypto, as we know, is very volatile. That's why you cannot look at this every single day. Check in on this on a monthly basis. Or if you ever hear news that crypto's popping off like crazy, of course, you want to check in to see how well you've done. There may be a potential for you to liquidate at that point if you have something else that you can actually put the investment gains towards to possibly offset your capital gains tax. If you don't have nothing and you're just going to let the money sit in cash, then I don't advise you to do that. I'm not a financial advisor. I'm just saying my own experience, what I would personally do. But if you want to buy another asset class that you have more interest in, that is understandable. But remember, you're going to pay capital gains tax the minute that you sell any of these assets here. Now let's jump into our $10,000 portfolio, which is a lot much more complicated. So as you can see, we have some asset allocations towards some other things. So I have ITYAX, right? Mutual fund, ARGFX, another mutual funds. Not much traction there. Our grayscale stocks that are linked to crypto, the only one that's in the positive is GBTC, which is linked to Bitcoin. Another thing I want to mention, the whole ETF Bitcoin thing that was happening, how it was going to massively increase the price of Bitcoin, make it hit 100, 150,000. It's all speculative. People are just saying things, running their mouth to hype things up for the media. Of course, people are looking at it. You rush to get these ETFs. For me, I don't personally see the difference between that and what Grayscale was already doing, because they had the thing as stocks, which you could have purchased inside of your retirement and different things. So that way you have access to Bitcoin without actually purchasing it directly. It ultimately did the same thing. But even Grayscale themselves, they converted their trust, their Bitcoin trust, as an ETF for the sake of, I think, it's just more of a security protocol. A lot of retirements would be able to access it now at this point, because it does allow, based upon how the system works legally, certain 401ks would have opportunity to actually tap into those different ETFs, bringing in these asset class inside of a lot of people's portfolios for their retirement and 529 plans. Nicola, as already mentioned, it went through an upswing, but right now we got to look at it for the long run. We're positive in lab, which is good. I think they're going to hit that point. A lot of companies are feeling a lot of pressure right now. Today, PayPal announced, the time I'm recording this video, 2,500 layoffs that they're planning for this year, which is crazy. I didn't look at the percentage of how much of their workforce that they're actually cutting back and reducing. But if you think about 2,500 people losing their job, it will have a huge impact on the economy. Assuming that everybody made 100,000, you're looking at $250 million in expenses that they are reducing potentially. Of course, you got benefits and things like that that could account certain factors, meaning that it would have cost them more than $250 million in order for them to retain these talents. But you also have compensation packages that they may allocate to these people, who knows? So they may end up saving half of that. NEO, we're still in negative. Workhorse, we're still in the negative. The thing that we're in the positive for is Law. Then we have ETCG, and all the other assets that we purchased are all in the negative. We are down in total about 10%, really 11% and change, which is not bad. You know, you're going to go through this up and down swing. I know for some of you who probably this is all that you had, maybe looking at this for the first time, meaning like you've never invested $10,000 before, so you're probably panicking a little bit and saying, man, I lost $1,000 that I've worked very hard for. It probably took me 3 weeks, 4 weeks, a month to actually save up for this money. This is how the market is. You're going to go through this upswing, downswing, upswing, downswing. I didn't initially start off investing $5,000, $1,000. I slowly got there until I got to 10, 20, 40, 50, and now I'm doing hundreds of thousands at a time. So sometimes I see my portfolio swing 10,000, 15,000 in a matter of a week. It'll go down 15 grand and come back up 20 grand the following week. So you got to build that tolerance to not pay it any mind and look at the long-term vision. Because if you are paying it that mind, you're going to go crazy, give yourself so much anxiety that's very unnecessary, right? And this is part of why we're diversifying all of this. If we allocated this all to one stock, potentially we could have got a nice gain. It would have been very volatile. Potentially it would have been a lot worse as well. So we have all these allocated towards this. And just to look at our allocations one more time, right? We got 10% to ITYAX, 10% to ARGFX, 5% to GDLC, LTCN, BCHG, and GBTC, right? Those are all the Grayscale stocks. So about 20% are all allocated towards Grayscale. Nikola 5, Lab 5, Neo 2%, Workhorse 2%, TDOC 2%, GoTo 2%, TAL, TAL 2%, Jemaya 3%, XPEV, which is their new symbol, at 3%, I'm sorry. Star, which is more of a gamble stock, 2%, Law 2%, Rivian, long-term car company, auto, EV space, 3%. Beyond Meat, I believe in the whole vegan thing, and there are chickpea-based meat. That's one of the reasons why I like them. They're healthier than a possible option, so I put 3% towards that. Paymentus, they're a payment processing platform. A lot of companies are using them, small business primarily. They're at 3%. Then we got to our crypto. We got Matic, 3%. Litecoin, 3%. Ethereum Classic, 5%. Doge, 3%. Shiba Inu, 2%. And then we have Near, which you probably not are going to be able to purchase off of like Robinhood. You probably are going to be able to get them off Binance.us if you're based in the US. Got that at 3%, and then Cadena at 2%. So that's how we allocated everything. Of course, these are rough estimates. You would have to do the math and calculate all this like you see here. For example, ITYAX, right? 10% of the 10,000 is $1,000, but in reality, when we bought it at $52.34 per share, we only purchased 19 shares, which was actually $994.46. So these are all estimates. It's just purchasing as much as you can to get closer to that goal. And I just got to rephrase this again. None of this is financial advice. I'm just showing you something for learning purposes so that you can see and understand how you could manage a $10,000 portfolio versus how you would manage a $1,000 portfolio. And we are seeing this live, how well it performs this year in 2024. As we did all these transactions in December, we are now in January, the end of January. We're rolling into February, and I'm excited for the new year. And as these numbers move around, we'll see how it fluctuates based upon news that we get from the economy. Right now, things are still a little bit tight with the jobs. The housing market is going through a shift. There are actually less homes sold if we compare last year's numbers to this year's number. Also, the enthusiasm is not there for a lot of buyers as well. Things are starting to normalize, at least in that sector, just a bit. It's not nowhere near where it was prior to the pandemic in 2019, but it fluctuates. The reason that this matters is because that correlates with jobs. If people are losing their jobs, they're probably going to potentially lose their home, which could have a trickle-down effect inside of the economy. Therefore, foreclosures are going to happen. The economy starts to panic. That may cause the Feds to change interest rates, and that may cause inflation to rise or suppress. If inflation rises, companies are tighter to loan money, which in that sense, which is what we're seeing right now. They most likely will do some cutbacks, do layoffs, try to cut as much operational costs as much as possible, just keep their core businesses running. That creates opportunities for a lot of startups to get in because they're not inventing as much, even though we're seeing this whole AI boom happening. But because of this whole slowdown in operations and experimental projects, it actually may give a lot of startups the opportunity to enter. Because remember, Airbnb, Dropbox, they evolved around these tough times because companies were not looking their way in what they were doing. So that could be a potentially good thing for other sectors. There's always a yin and yang to everything in that sector. So that's how the real estate ties to the whole economy, which will affect stock prices because if interest rates are so high, people don't have as much cash. They're going to try to reserve it, either keep it in a savings, get the high yield savings account of 4.5-5% that you can get now, or put it in bonds, which you'll get the same returns instead of actually purchasing stocks, which will keep stock prices at a certain price. So you start to understand and see how it all ties to the whole economy. When we had in 2020 going to 2021, the government stimulated the economy. They printed all this money. What did companies do? They loaned because the interest rate was so low. They borrowed money, did not spend their cash, instead invested it into different assets. The assets grew in value. If you held on to your stocks, crypto around the time, you saw the spike up until 2021. Then it got really crazy. It got out of hand because of inflation. If inflation did not spike, everything would have been continued. But the greed happens. People get greedy. They keep doing the same thing and borrowing too much. Right? You want to borrow to a certain limit. But if the government's letting you borrow, you want to borrow as much as you can until it realistically doesn't make sense. You still got to budget at a conservative level, meaning you got to always have in your head, do I have enough in case the worst case happens, recession hits, am I still able to sustain and run things and keep my investment goals on track? Because your portfolio, your investment goals that you set, any investments that you're purchasing, you want to make sure you'll be able to ride out those tough times, because if you can survive those, trust me, the golden times, you're going to see a kill. And that's what I'm looking forward to in the coming years. For those of us in the U.S., April 15th is the tax filing deadline. Try to get in as much as you can if you are able to inside of retirement, because you have until that date to put money towards your 401k, IRA, 403b plan that you may have, and your HSA. You could leverage to actually purchase some of these assets, which would still count for last year's contributions for 2023. All these are opportunities that you have to build wealth for the long run. You get a nice tax deduction for your tax filing, right? So whatever income you made in 2023, you can help reduce your taxable income and get a little bit more money back that you can actually use, so that way you can purchase more of these assets or partially invest in businesses as well. Because I want you to also have that mindset that investing in your own business should be one of the assets class that you consider. You can't just invest only into stocks and crypto. If you have business ideas that you are working on, or have other businesses that you can support, of course, do your own due diligence and homework. Set some towards that, because some businesses have a higher return than you can ever get inside of the stock market or crypto. It could be way more volatile if you do it right. And we've seen the case of Starbucks, Airbnb. If you were one of those early purchasers of these assets before it got crazy and became public, you definitely bank really nicely. So keep that in mind. I hope you found all of this insightful. Looking forward to sharing more with you, and we will track this again next month. I will not be doing weekly videos on this because you will go crazy. We're going to check progress from month to month. The only times I might bring this up again is if there's a surge in the market, both stocks and crypto, one or the other, then I want to bring this to your attention, so that way you can see how things have moved around based upon certain news and factors. Peace and love. Trust in Jesus. Like, share, subscribe. Have an amazing one. Hustle, 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 stay.